Good day, traders. This is Rich Derrick from Tradesight.com. Just wanted to circle back and take another look at Royal Gold. That's RGLD. We looked at this about a week ago when we had seen this formation setting up, where we're looking for an exhaustion point from our seeker study. The chart has obviously had a pretty good breakout here and is pushed up very aggressively up into that $100 level. We're waiting for the seeker countdown. These are the red numbered bars to proceed all the way to a 13, which we do have here on the chart now. Now that we have our 13 in place, that means that our setup phase here with the green numbers, and then also our countdown phase, which is again the red numbers, has made it all the way up to produce a 13 exhaustion warning. So now that we have our exhaustion warning in place, we want to consider getting out of any residual longs and also switching gears to the short side. So the question becomes, where is that level now that we have a 13 exhaustion in place? Now, just because we have a sell signal from the seeker doesn't necessarily mean that we're going to switch from the long side to the short side. What we need to do is take a look at something that we've found very useful over time and employ the use of a 10-period exponential moving average. That's the 10 EMA. So let me change the chart here from just the seeker with the bars to include that EMA. All right, so now we've flipped the chart and we now have the 10 EMA on the chart. So what we have here is the same situation. We've got a 13 exhaustion warning up here, and we've got our EMA. Now we like the exponential moving average because it tightens up price closer to the near-term candles. So what we're going to be looking for in switching from the long side to the short side, what our trigger or our timing is going to be on this, is when price reverses and closes back down below the 10 EMA. Now you can see we had a close down here that was below it, but we hadn't received our exhaustion warning yet. But now that we have our exhaustion warning in place on the chart, if we get a close below the 10 EMA, that will be the signal that the chart has gone from positive to short-term negative. And once we go short-term negative, then we're going to be active on the sell side. So the short's going to be under the 10 EMA exponential moving average. And of course, every trade needs to have some kind of a stop or some kind of a money management system built into it. So what we're going to use here is, you can see just under our 13 up here, there's a magenta line. That's going to be our risk level. That's not going to change, but it's going to continue to project forward in time here at that same level, about 102.60 or so. And that's going to be the level at which we would consider the trade broken or upside down if it goes back above that. It settles above that and trades one tick higher. So again, the short is going to be, and the reversal is going to be back down with a close underneath the 10 EMA. The stop loss is going to be our seeker risk level, which is automatically plotted on our chart here. Remember, if you'd like to learn anything more about the seeker, feel free to stop by the lab and ask a question. You can take a free trial at Tradesight.com, and we look forward to seeing you soon. Again, this is Rich Derrick for Tradesight.